Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a smashing weekend. Quick announcement, we're not going to be putting any videos out next week. I'm going to take the time off. I'm essentially going to take a week off. I will still be updating my Patreon members, but from the YouTube standpoint, I'm going to take next week off. So there won't be any sort of daily cryptocurrency market updates out next week. I will, however, release some pre-recorded videos. So if you're wondering why we're not making any videos or no videos are coming out next week, it's essentially because I'm deciding to take the week off. You know, we've been making cryptocurrency market update videos and cryptocurrency related videos now for the past 2.5 years, pretty much every single day. So right now, whilst the market's doing what it's doing, seems like a good time for me to take a week off and then get back to things, see where things are, and then really dive back into everything. But I will still be updating my Patreon members. But what I really want to do is leave you with some things to look out for next week, going into towards the end of this month, towards the latter half of this month, because I can feel the emotions. I speak to people every day. You guys know just how passionate I am about the cryptocurrency market. It's a very frequented conversation that I have with people, and I can feel the FOMO. I can feel the emotions right now of people wanting to get back into this market in regards to feeling like they've missed out, feeling like they've not caught the perfect bottom. In my opinion, this is still, I don't think crypto is bottom. This is not bottoming structure. I think this is still very much an intact downtrend. Could this turn into the cryptocurrency market generational bottom for the next 4 years? Potentially. I just don't happen to think that that's the case. And the reason I don't think that's the case is because markets are driven, again, I always say this, it's like Groundhog Day, via liquidity. Okay? And when I look at the consumer part of liquidity, so people like me and you, retail, I think that becomes very, very constricted. I think there's going to be a wealth destruction in regards to inflation, in regards to bills becoming more expensive, food being more expensive, so on and so forth, that we're only just starting to see and is probably going to get worse into the winter. And I don't think that is very good for markets. I think March 2020 onwards was a go and look at the M1. We'll put it up very quickly, actually, for you. We're in a simply different environment. This is the M1 money supply. We don't have that liquidity from a Federal Reserve or a central banks propping money into markets. And we also don't have that liquidity that's being shelled upon retail people like me and you to put it into markets. So there's a real kind of restriction that's still in play. And I don't think that kind of an environment broadly, and we'll touch on it once I've kind of gone over my overall stance. That environment broadly, and I'm also going to talk about the yield curve a little bit. That environment broadly is one that will support this being the start of a new bull market. I think there's a lot more work to be done. At the end of the day, guys, long term, nobody's more bullish on crypto than I am. We've been saying for 4.5 years now, nearly 5 years, just how much this space and blockchain is going to change the world. We're seeing it every single day. It's on its way to becoming the new asset class. It already is, in my opinion. We're just yet to sort of realize that through it being legislated and pushed by Wall Street and all this stuff. But that's all coming down the sort of road. But I think there's a little bit more hardship to go through before we enter that opportunity. Now, I have buy signals. I have things I need to see before this convinces me that this is the bottom. And on a more macro perspective, I need to see this really ease out. Just again, to show you the RSI here, this is still very much an intact downtrend. Your money flow index is saying a similar thing. So is your accumulate and distribute index. Now, there are and is some slight divergences on the accumulate and distribution and the money flow index for Ethereum. But given the Ethereum merge, I've been waiting a long time for this merge. I still hold a very small amount of Ethereum. You guys know we're mostly cash dominant. But given just how much of a big event that the merge is, you should really expect this. The problem that you've got is after the merge, who's going to be buying Ethereum in this environment? you know, there's also going to be a lot of sell pressure as a result of it, in my opinion, because people are going to have essentially had a lot of their ETH locked up that they may now gain access to. So now we've got my sort of more broader thesis, and we'll talk about, winter's coming. And that isn't, I'm not referencing Game of Thrones there. I'm very much referencing the fact that I think it's going to be a harsh winter. This is one that really, caught my attention this morning. Google searches for firewood in Germany. And this is the thing, they're already struggling with their electricity costs, with their supply side of energy. That is going to be a real issue. We've seen inflation reduce. It's the summer. Also, important thing to note, and thank you very much, by the way, to this individual for tagging me in this. The market sentiment. You can see his tag there for anybody that wants to follow me. Tagged me in this morning, talking about the fact that the Fed, the government have essentially been, not the Fed, sorry, the government have been dumping oil onto the market, and you can see that via their reserves. This is why oil's had such a reduction in price, and it makes them look great. But the issue is, don't get me wrong, I don't think inflation potentially might even ever go back past, or I won't say ever, certainly in the short term, go back past 9.1%. But even if it stayed where it was, or even above 7, even above 6, it's still really, really sticky. And in actual fact, even if inflation printed 0 on the last one and 0.00, you still have inflation at 6.3% by the end of the year. And that's with 0 prints. So I think inflation is going to be something that people are underestimating. Markets are kind of going, okay, like repricing. This rally's, there's a lots of DNA within this rally in regards to what is propelling it. Short squeezes, massively propelling it. Short covering, massively propelling it. This is the third largest spot covering in over a decade. The last time was in January 2021. So you've got your short positions from institutions being covered just in case, they're essentially hedging that, okay, well, whilst it's rallying, we're going to put some almost insurance in place to make sure that this doesn't take us out. And that's going to propel the market even further. We've now got, and I think largely right now what's driving this is FOMO, people's emotions and going, okay, well, why aren't we, we've missed out, we need to get in. I'm seeing it all the time. For me, and when you have a larger amount of capital to put into markets, you have to be a lot more careful. And again, risk to reward. I'll show you what we need to see and what's concerning me about this rally in just a second. But I think it's going to be a very, very tough winter. I think inflation, I was going to show you natural gas, which I've previously pulled up, is on its way. Ignore the draw there, guys. This is, natural gas. You could be looking, if this plays out how it may, at around about $14.6 dollars. Natural gas is basically back at all-time highs. Oil has significantly sold off. But the question you got to ask yourself is, does it come back? When the US start to get really lean on their supplies and can't sort of dump on the market, what is the effect of that? We still have all the kind of supply chain issues apparent. Who's this? And this is the real issue for me is do these persist? Does the dollar also sort of go back to being dominant again? The dollar had an amazing run. It's natural to expect a pullback. We actually only thought it would go to a 1.8, which we called ages ago. It's had a really nice pullback. The problem is going in September, they are going to raise rates again. Are they going to do a 75? Doubtful, but they're still going to do, even a 25 basis points would be strong given where the dollar is. And I think they continue to persist on this sort of hiking regime. And again, looking at the money flow, you can really get the picture here. I mean, it was still going up here. It's teetering off. Obviously, your market's a little bit lagged, just like, you can see that there's always a bit of a lag here. But yeah, so that's enough of the money supply. Let's get into a little bit of, I just want to make this a bit of a longer video because I'm going to take next week off just to take you through things that I'm really looking at. Let's take a look at a little bit of technicals in regards to this structure. Now, I did previously say that I was not a massive fan of the rising wedge idea, but it's looking more and more like it, to be honest. We'll take it off log. It's looking a lot more like a rising wedge here. You know? And it's what comes now. There's still the room, by the way, and we've always said, we said a long time ago that if you were going to get a rally across markets, it was going to be here. And we said that by looking at the NASDAQ and the 200 weekly moving average, which I'll very quickly show you guys. Let's do 200. Pop that sucker on. This is a daily, so that's not going to work. You know, we had said that if you were going to bounce right when we were down here, it was going to be here, given where we 200 weekly moving averages, and it's supported you the whole way up since 2008. Issue is, I think that again, just like with 2008 here, you have this rally and then you come back inside it, given the kind of environment that we're moving into. So, what does crypto do in that environment? For me, it goes with it. That's sort of the short and simple answer. But going back to this falling wedge structure, or this potential falling wedge structure, it does seem to be there. How is this invalidated? Well, you can just grind up to here, where you'd have this pretty significant resistance. Then you've kind of got to ask yourself the question, okay, well, what's happening? For the bulls here, if you did something like this, or it was maybe a less of a pullback, and then you grind into it, and you did something like that, then you've got potentially structure for reversal. But you've got to do that. Let the market show us that this is the direction that it's going in, and that this isn't just a relief rally. You've got to see the strength there. The market's got to basically tell you, okay, right, this was the bottom. It's time to keep a move on. The issue is with this is, is it much different from this? I don't think so. Or, is it not just the reverse of this? So can you note, this is what I mean by bottoming structure. You're pounding these lows out in a falling wedge kind of a manner, which led to that big breakup. Volume also really confirmed it. The issue with this is, where's the volume? You're actually declining in volume whilst going up in price. Had a similar thing take place over here, actually. And this is the issue. It's not this kind of pounding the lows out. It's more made a couple lows and then you're off. And now you're grinding higher. There are cases where this will break just straight up, and that would be a very bullish sign. But let's deal with getting out of this structure first, okay? Because if you invalidate, structure's only valid until it's invalidated. But the second you invalidate this, then we can kind of look at something else. The problem is, at the moment, still very much intact. There's not really on the daily any sort of bearish divergences. There are a few, actually, looking at the money flow index, but this is on the daily. I think the weekly would actually support this. Also, you've potentially got something forming on the accumulate and distribute index. So this is a concern. This isn't really what I'd want to see. I'd want to see more of a longer period of grinding. Maybe let some of your sort of shorter term weekly EMAs catch up with you before you look for that next move to the upside. Could Bitcoin push up? I mean, within this, using this falling wedge again, you've still got room to grind around in it. You do something like this, you maybe find a bit of strength. You do something like that, come up to sort of towards your 25.50, and then you get the drop. And if you see the volume on the drop spike, you know what time it is. Because, if you see something like some big volume coming in on this drop, you're really confirming the move. You may get a retest and then come down. These are just things I'm looking at, just hashing out for you. But the overarching view that I have is that this is still a relief rally until proven otherwise. And we've given you one scenario of how that may be the case. We've not spoken about this in a while. This is essentially a good way of predicting, crises that are at hand, or coming very, very, not so far in the distant horizon. You know, these have typically given you sort of a 2-year warning when you get the negative yield curve inversion, that you're essentially going to have some sort of a recession or a crisis or something like that. You know, the last one we had that led into March 2020 was in 2019. This was caused by the repo market, JP Morgan essentially in the euro dollars. And then this is where we currently are, and this is concerning because we're actually pretty much at a low on the yield curve. You know, this is signaling that something is coming down the line. Now, this only took 6 months. These have typically taken 2 years to play fully out, like the one that led into 2008. The first yield curve inversion you had was 2006, and then it went back into it in 2007, and shortly after, you actually had the 2008 financial crisis. This one only took 6 months. How long is this one going to take? This is the thing. There's a big element of risk here that I don't think people are quite pricing into the overall picture. And that's really one thing that I'm paying attention to is the risk, because I don't want to get caught in, I'd rather have the confirmation to get back into the markets that I need confidently than to go, okay, I'm going to put my money in or get heavily back in. And then all of a sudden we get some sort of a capitulation event potentially, or structure breaks, and then we start invalidating a lot of what the structure we made on the to the upside. So this is the important thing. You know, there's lots you've got to look at right now. And I think it's important to sort of weigh it all up. But this is a concern for sure. Let's get into a little bit of interesting things. Again, talking about the fact that the government has essentially been dumping oil onto the markets. This was very interesting, correlated to the winter that we're about to go into. You've got a lot of short coverings right now. So this will essentially be a short squeeze, short cover, FOMO rally that potentially doesn't have that much behind it, and you've got, it's also summer, right? So you've got a lot of big players out there that will be on a beach sipping a pina colada. You know, they're not going to be, you know, this isn't going to be prime time markets. You want to see the direction of markets in kind of a busy time, not a time period when everyone's on holiday, if that makes sense. Certainly including some of your big players. So it's the summertime, low vol. This is low volume move. Let's see what happens when people start getting back to and putting feet under the desk. That's going to be interesting. So yeah, I think we said enough on Bitcoin. It's just really moving into winter that has me, you know, concerned for markets generally. Certainly if rates continue to stay high into that period, which it's looking like they are going to. You know, you've got liquidity getting taken off the table from that aspect. You've also got consumers having to, you know, choose between the heating bill and buying Bitcoin. You know, very different environment from March 2020 onwards. Europe bracing for the apocalypse? Potentially not, but this is the French and German 1 year forward electricity price, and it's just insanity, as you can see. And I think that this is, you know, likely, you know, this was a good week for inflation numbers, but whether it can last or not is the big question. You know, and this, I think, is the big question. Do we get above 9.1? We may never, but does it stay persistently high whilst you have the Fed on a very aggressive rate hiking cycle? That's the real question that I think, you know, we should be asking here. And does that lead to some sort of a stagflationary environment when you have growth being killed off by the Federal Reserve, and then you also have you know, high inflation, which is killing the consumer. So you're getting essentially pulled at both ends. And that, you know, is that the kind of environment for a flourishing market? Do you see what I mean? As much as I'd love for this to be the, you know, the bottom, and we can all get bullish again and we can all start making loads of money. For me right now, I'm not convinced. I'm going to maintain that stance. I know it's not a popular opinion, but it's one that I hold. There's no point in me coming on here and telling you guys a load of, or what you want to hear for popularity, because ultimately, you know, that's not being truthful. This was something interesting. The Celsius network is bankrupt. So why is sell price up 4,000% in 2 months? Doesn't make a lot of sense. Just like a lot of things right now. I mean, AMC did amazingly well. You got all your meme stocks popping off. This is typically the time where you want to be going, okay, you know, things have done very well. Let's take a little bit of profits. That's all I've got for you in this video, guys. Bit of a longer one because I'm not going to be doing any videos next week. Or I will be releasing some pre-recorded ones with some guests. But that's it for me, guys. So have a good week next week. I'll be back the following week. You know, just keep your head in the game. That's really all I can say. So if you've enjoyed the content, as always, a like is always appreciated. So as a comment, and I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, guys.